think if this negative real yield environment continues, then it should be continually be good for assets that have some degree of scarcity. And so if you look back with even the past 10 years, so the longer end of the Treasury curve generally had yields that were at or above the official CPI inflation rate, at least, whereas T-bills were below the inflation rate for most of the past decade. And so now going forward, both T-bills and T-bonds have their yields that are below the official inflation rate, let alone any imperfections in that inflation rate to kind of truly capture real inflation. And so as long as that persists, that is pretty good for real assets. And I think that, Bitcoin is one where, the majority of the world can access it, right? So not everyone can access stocks, especially in emerging markets, right? But anyone with a smartphone, which is something like 4 billion people now, can access Bitcoin. And so, some of the most inflationary effects are not even in developed countries. And so, right now the lowest areas of inflation are in places like Europe or Japan. Then you have higher inflation in the United States because we increased our money supply at a faster rate. But then when you go out into a number of emerging markets, they have higher levels of inflation, and those are environments where, I think that there's a much easier case even for holding Bitcoin. I think the case is really good in developed markets. But for example, if I was in Turkey, if I was in Argentina, if I was in Brazil, if I was in any number of these countries, uh, you know, as volatile as Bitcoin is, it's more attractive than holding large amounts of the local currency. And so I do think that these forces will be continually beneficial for the protocol over the next 5-10 years.